Hello everyone. In this particular problem, we were given a balance sheet that is not correct and we need to make some adjustments. So as we see here, we have a company, Big Screen Scripts, and they're in the entertainment field, and their manager has a very limited knowledge of accounting. And so the gentleman prepared the following balance sheet, and we can see some of these amounts. Even though the balance sheet balances, we have assets total $165,870, and on the other side we have liabilities and owner's equity totaling the same amount, $165,870. Even though the balance sheet balances does not necessarily mean that it is correct. So what we were given here is we're looking at all of these dollar amounts, and we are given additional facts, and we need to decide whether the additional facts would change our mind about certain balances. So let's take a look at information number one. The amount of the cash, which is right here, $5,150. That includes $3,400 in the company's bank account, $540 on hand in the company's safe, and a $1,210 in Pippin's personal savings account. Well, the amount in the manager's personal savings account is not company cash. So that $5,150 should not include the $1,210. So the right amount is right here, cash $3,940. So I'm going to keep going back to the corrected balance sheet, looking at the incorrect and going to the correct as we go through each one of these items. Okay, notes receivable, and we see notes receivable is here. It is initially recorded at $2,700, and it goes on to say one of the notes receivable in the amount of $500 is an IOU that Pippin received in a poker game several years ago. The IOU is signed by BK, who Pippin met at the game but has not heard from since. So, in your opinion, does this $500 sound like it is legitimate corporate cash? No, absolutely not. It is a personal receivable. It is not a corporate receivable. So the $2,700 really should be restated in here. It is down here. I'm circling it. $2,200. Okay, the accounts receivable is the same, $2,450 in the original and $2,450 in the corrected. Now let's take a look at office furniture. Office furniture, you can see originally stated $8,850. And the information given to us, really 3 and 4, it states a couple of things. Office furniture includes, so the $8,850 includes $2,900 for a Persian rug for the office purchased on November 20th. The total cost of the rug was $9,400. The business paid $2,900 in cash and issued a note payable to Zoltan Carpet for the balance due. As no payment on the note is due until January, this debt is not included in the liabilities given here. Well, what do you think? Do you think the office furniture should just include a $2,900 rug because that's all we paid in cash? Or do you think it should include the total cost of $9,400? And the answer is it needs to include the entire cost. Regardless of how we paid for it, even if we only paid partially cash, the office furniture should include $6,500. And number 4 goes on to say, also included in the amount for office furniture is a computer that cost $2,525, but it is not on hand because Pippin donated it to a local charity. So that $2,525 is included in the number. Do you think it should? And the answer is no, because the company no longer owns it. It donated it. So the $8,850, let's take a look. The $8,850, we need to add $6,500 because of the note, the piece that we didn't pay, and we have a liability, a note payable, minus the amount that was donated to charity. So The office furniture updated amount should be $12,825. And we're going to throw that in here, $12,825. All right. Now, building $54,320 is the original amount, and there's no adjustments to that, so that is going to be the corrected amount as well. Okay. There is another account called Other Assets, $22,400. So number 5 states the other assets of $22,400 represent the total amount of income taxes Pippin has paid the federal government over a period of years. Pippin believes the income tax law to be unconstitutional, and a friend who attends law school has promised to help Pippin recover the taxes paid as soon as he passes the bar exam. Does this sound like a legitimate asset? And the answer is absolutely not. So that $22,400, as you can see on the updated balance sheet, it's not included here at all. It is 0. Next, there's an asset called land. Land has an original balance here of $70,000. And number 6 tells us the asset land was acquired at a cost of $39,000, but was increased to a valuation of $70,000 when one of Pippin's friends offered to pay that much for it if Pippin would move the building off the lot. Well, just because the land is valued more than an original cost, for accounting purposes, we keep the land at the original cost. So the $70,000 is incorrect, and correctly stated, it's going to be stated at its original cost, called historical cost, of $39,000. So that takes care of the assets. Now on the liability side, we see a notes payable of $67,000. But as we mentioned way back here in number 3, do you guys remember? There was a $6,500 note to the carpet company that we did not recognize. So the $67,000 should be increased by $6,500. And the new updated number is $73,500. And next, accounts payable, originally stated at $35,805. And last but not least, number 7 tells us the accounts payable includes business debts of $32,700 and $3,105 balance owed on Pippin's personal MasterCard. Well, from here you can see the valid business debt is only $32,700, so we will reduce that amount as appropriate. That gives us total liabilities of $106,200. The capital stock is $5,000, and that doesn't change. And the retained earnings is basically going to be the plug number. And what do I mean by plug number? Well, we know our total assets are adjusted to $114,735. We know our liabilities are $106,200. We know our capital stock is $5,000. Well, we need the total on this side, liabilities and equity, to equal the total assets. And in order to do so, our retained earnings are restated at $3,535. Now, this is not an exercise that you would normally see in the real world, but this is something that as you are learning accounting, I wanted to show you, sometimes I wanted to show you the difference between personal debts, personal assets, and company debts and company assets. And this was a good exercise in order to do that.